Hey everyone, it's Zach Beck. You might be interested in investing but don't know where to begin. There are many options out there and it can be a bit confusing and also a bit intimidating. But what I want to let you know is that you do not need a background in finance, you don't need thousands of dollars, and you don't need to pick every individual stock that you invest in order for you to actually put your money to work in the stock market. So what I want to do in this video is share specifically what robo-advisors are, how they can benefit you personally and allow you to still achieve your financial goals while taking a more passive approach to your investing strategy. So let's jump into it right now. So what is a robo-advisor? A robo-advisor is an automated financial advisor as well as an investment platform. The system uses a software algorithm to build your portfolio, and all you have to do are answer a number of questions at the beginning in order for it to construct that portfolio for you. Here are a few of the questions it will ask you. What is your age? When do you plan to retire? As well as what type of investor are you? Are you more conservative or are you more aggressive? Robo-advisors use automation and software to build your portfolio for you based off of the questions that you've answered. Some of these accounts require specific minimum. Perhaps you might need to have $500 in order to begin opening up accounts. However, others don't. So you might be able to open up an account with just spare change or a little bit of an extra dollars you have in your bank account right now. So you might be asking yourself, what's the difference between a robo-advisor and a traditional brokerage? Well, the difference is automation versus personal attention. And what I mean by that is that when you go through a traditional brokerage, you will work with a specific person who's a financial advisor who will construct a portfolio for you and will kind of continue to monitor that over time. Now, what you're finding with a robo-advisor is that a robo-advisor is utilizing that algorithm and the automated software to construct your portfolio and continue to manage it over time. Generally speaking, because a robo-advisor takes a more passive approach by utilizing an algorithm, the fees are generally lower. When you work with a professional brokerage account, generally that individual is going to take a much higher percentage because they're working actively to actually put that account together for you. Now, the distinction between these two is pretty substantial. If you would like a more passive approach to investing, robo-advising is definitely a more expedited process that you can go through, and it's very streamlined and simple for you to use. If you want to take a more specifically tailored account where you actually have someone assessing your stocks on a daily basis and managing it that way, perhaps you go with the traditional brokerage account. But once again, when you go with the traditional brokerage account, it's going to cost more, not only in fees, but generally higher account minimums. In addition, robo-advisors primarily invest into what are called index funds and ETFs, or exchange-traded funds, whereas if you go through a traditional brokerage, they will be able to provide you with more options and securities, but you're going to have to pay more to be able to go that route because they're going to be picking and choosing individual stocks. Now, like I've said before on this channel, I prefer specifically going through index funds because when you utilize an index fund, you're investing in the broad stock market as a whole, and that allows you to diversify your approach to investing and not put too much risk into one company. Now, with risk comes reward, so sometimes you might get lucky and invest in the right company and they could actually exponentially grow and yield a better return than an index fund. But historically, index funds return between 5 to 8%, and that's generally what you're going to have when you have your dividends reinvested and you adjust it for inflation. So that's something to consider, as a robo-advisor allows you to tap into these index funds and ETFs without having to do much other than just put money into the account on a monthly or weekly basis. Here are some of the pros and cons when it comes to utilizing a robo-advisor. Like I previously said, if you're interested in investing but don't really know where to begin, a robo-advisor is a pretty wise approach to take because you know that you need to manage your money well, you know you need to actually put money into the market because it's got to grow over time, but this is where it becomes a bit confusing because you don't know if you should talk to a financial advisor, if you should open up a brokerage account, or if you do something online. So what I want to share right now are some of those pros and cons. And the pros begin with, first, instant diversification when you use a robo-advisor. And like I previously mentioned, when you go through a robo-advisor, you primarily invest into what are called index funds or ETFs. So that's generally going to construct a portfolio for you that actually has many stocks included, such as if you were to invest in the S&P 500. So you'd be investing in basically all 500 of those companies as opposed to just picking one. And that's generally going to provide you with more stability and security because, as you know, with the economy shifting and markets continuing to modify themselves, you're going to see that companies are going to come come into the S&P 500 and leave the S&P 500, and that's just due to what's naturally happening in our market. So if you invest in the total S&P 500, you don't have to worry about which company is eventually going to be in there or what company is not going to be in there in the future. You just know that you're overall investing in the top 500 companies in the United States of America. Another pro for robo-advisors would actually be the minimum investing requirements. Like I said before, you might be able to invest with as little as a spare change, a couple of dollars, and maybe have to go up to maybe $500 in order to open up an account. And compare that to when you open up a brokerage account through a traditional brokerage, that could be in the thousands of dollars to actually be able to access that. So you don't really need a lot of money to begin. You can basically sign up on your phone and get things going right now. So from that perspective, I believe it's very easy to access, which is the main benefit of people utilizing these services. Another benefit are the low fees. Like I previously mentioned, when you go through a robo-advisor, you're not utilizing a specific person, you're utilizing an algorithm. And that algorithm doesn't require much work because it's already programmed. It's just taking your specific details into that and plugging it in so that way to adjust your portfolio accordingly. So from that perspective, you're gonna pay a lower fee because there's not an actively managed component to your portfolio. Versus when you work with a professional advisor, that person is going to charge a much more substantial fee for managing your portfolio. And when you factor in, say, a 0.25% fee versus maybe a 1.25% fee for an actively managed approach, that will grow dramatically over time as your portfolio grows. So you really want to keep your fees and expenses low because you want to retain as much of the gains as possible as you're putting your hard-earned money into the stock market. Another benefit of robo-advisors is how easy they are to use. Like I said, you can open up an account on your phone, you can access all of your information there, and be able to actually easily understand what's happening with your portfolio. So I find that to be much easier than having to pick up a phone, calling up a traditional brokerage account, or having to email or do anything like that. I can just open up the app, look at my phone, and see, okay, this is what's going on with my account right now. I understand what's happening, I know where the money is going, and generally speaking, it's just very intuitive. Another benefit of utilizing robo-advisors is the option of actually having more socially responsible investing. Now, this is up to each individual. I'm not necessarily recommending you go through this approach, but if you have an aversion to maybe investing in like fossil fuels or certain big companies that you don't really support, then you can actually take a more socially responsible approach, and some of these robo-advisors allow you to do that. So that's another side benefit, but most importantly for yourself, you really want to focus on having a good return long term so you're making your money work for yourself. But if you want to do so in a socially responsible manner, these options are actually out there for you through these robo-advisors. There are a few cons to utilizing robo-advisors, and the first would be the limited human interaction. If you want to be able to pick up the phone and talk to someone specifically about your portfolio, then going through this approach is not the way to do so. If you want to be able to email or meet in person with your financial advisor who can walk you step by step and show you what's happening with your brokerage account, this is not the way to go. But once again, factoring this into consideration, generally speaking, when you look at the returns of brokerage accounts versus not just robo-advisors, but the index funds they are investing in as a whole, generally speaking, the index funds will overall, over time, generally outperform people who are trying to individually pick and choose stocks. Now, if you have accumulated a significant amount of wealth and you need to really diversify your approach to investing, then you might need more hands-on, walking you through that process. But I would say for the vast majority of individuals who are just looking to begin investing, who might be living paycheck to paycheck, who are just dealing with trying to find a way to actually be able to actually retire in the future, then trying to go the robo-advisor route, I think, is a bit of a better benefit than just being able to actually have human interaction with someone. Another negative associated with robo-advisors would be the lack of being able to invest in a broad diversity of securities. And what I mean by that is that when you go through robo-advisors, you're primarily going into index funds and ETFs. You're not going to necessarily have the option of going into precious metals or going into real estate or doing things like that. And that's understandable because the robo-advisors need to keep things pretty simple and streamlined. So if you want to open up your options and go into different areas of investing, then probably a robo-advisor is, in this specific respect, would not be best for you. And lastly, I would say that robo-advisors are not necessarily great for everyone because, once again, it depends upon your specific circumstance. If you have a significant amount of wealth, if you have a number of assets, if you have all these different things, perhaps a robo-advisor is too streamlined, too automated, and doesn't have the tailored approach to you. But that's, once again, specific to your circumstance. I would beg to differ and think that the majority of individuals who are out there just looking to begin investing just want to see some rate of return over time so that they're outpacing inflation and beginning to understand how to get their money to work for them so that way they can build wealth over time. You might be saying, well, Zach, how do I get started? And on that note, what I would encourage you to do is to ask yourself a few questions while you're perusing the internet, trying to find the best robo-advisor that meets your specific needs, and ask yourself the following question. What are the minimum requirements? You really want to understand what threshold you need to meet in order to be able to utilize a specific platform, such as, do you need to actually have a certain amount of money that's going to go into the account? Do you need to be a certain age? Do you need to make a certain amount of large contributions over time? Just whatever it is for you, really want to look at what are the minimum requirements in order to utilize this type of software. Furthermore, you want to understand what are the fees, because like I said previously, fees will add up over time as your portfolio grows. 1% of $1 million is a good amount of money, so you really want to try and keep your portfolio fees down low. And a lot of these different robo-advisors are going to utilize lower fees, maybe 0.25% or lower, so just factor that into consideration. Furthermore, you want to ask yourself, do you have the option of being able to talk to a human if you utilize this particular service? Because you might get years down the road and actually want to ask some questions, and you might want to see if this particular robo-advisor has that option. And some of them do. You just might actually have to pay a fee or pay a little bit more to utilize that type of service, but it's just something you want to know, that if in the future you're going to actually want that type of level of hand-holding and that type of service, you really want to know if they offer that out of the gate before you're too far into your investment strategy. You might be asking yourself, well, what robo-advisors are out there right now? And there are a myriad of options for you to choose from when you go online. I will just cover a few right now to give you kind of a basic overview of what is out there. And the first would be Ellevest. And Ellevest, this particular approach, has no account minimum. The monthly membership fees range from $1 to $9 a month, and they're specifically maybe designed a little bit more for women in mind. So it's actually interesting if you're wanting to go that route. So Ellevest, I'll put a link in the description for you to check them out if you're at all interested. In addition, there's a company called Wealthfront. Now, Wealthfront has a $500 account minimum. They charge 0.25%, and they're great for most investors. Full disclosure, I specifically use Wealthfront, and I've been very pleased so far. They provided a good return. It's a very intuitive platform, very easy to use and streamlined and simple. So from that perspective, I really like them. If you want to check them out, I will also put a link in the description for you to go for it. But once again, I'm not necessarily encouraging you to go that direction. If it doesn't fit for you, that's totally fine with me. I'm just letting you know, after going through all the research, I determined that Wealthfront was the right fit for my circumstance. Another company that many people have heard of is also called Betterment. Now, Betterment is different than Wealthfront in the fact that they have no account minimum. They do have the same 0.25% annual fee, and they have opportunity for financial advisor if you pay for an extra cost down the road. So if you want that extra hand holding, if you want that person to be able to walk you through the process, then this particular option of going through Betterment could be beneficial for you. In addition, you have a very simple approach to take on this next one. It's one I actually use in addition to Wealthfront, and that is called Acorns. Now, Acorns is very simple. There's no account minimum. It's basically a $1 to $3 a month annual fee or monthly fee, but the approach here is a little bit distinct in the sense that when you go through Acorns, what it does, it rounds up all of your purchases and then invests that into the stock market, generally into a group of index funds or ETFs. And with that said, what you do is if you were to go to the store and spend $2.50 on something, it would take that remaining 50 cents, round that up to $3, and take that 50 cents and invest it into the stock market. The main benefit I like of Acorns is just basically setting aside some extra money, spare change that you wouldn't even think of. I personally would prefer to use a more robust platform like Wealthfront or Betterment to actually have as my main vehicle for investments when it comes to robo-advisors, but Acorns is a nice little side thing that you can do without even having to think about it. You can put money aside and let that grow over time. It's maybe a sizable portion. You could use that for a fund for your kid for college. You could do it to buy a car years from now, buy a house, things like that if you're doing it on a regular basis. So those are kind of some different companies that exist out there right now. I just wanted to share those with you. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. It would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. Because you might have a friend or a family member who's also interested in starting to invest, but doesn't really know where to begin and is a little bit confused. So I hope this video specifically would answer some of their questions and allow them to make a wise financial decision so that they can achieve their long-term goals. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do anything I can on my part to be able to help you once again achieve your specific goals. in that sense, I also would really love it if you actually took the time to subscribe to the channel, because I take a lot of time to put together these videos. I really want to create content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. So by subscribing to the channel, it just allows you to be notified if I continue to post videos, which I do on a weekly basis. And on that note, please tap the notification bell. That will notify you every single time I post a video. Once again, I'd like to thank you for taking time to watch a video today. I look forward to talking to you next time. Have a great day.